Right now, let's bring in Fred Kempe. He is the president and CEO of the Atlantic Council. He's also a CNBC contributor. And Fred, we're ticking down. Sunday is the December 15th deadline before those new tariffs are set to come in. Not that I anticipate we're going to have a deal that's wrapped up by then, but where are things headed in terms of whether or not you think those tariffs are actually put on, those additional tariffs are imposed?
So, Becky, first quickly on the big picture and then on the tariffs. The big picture, and I've been saying this on your program and elsewhere, we're in the 17th month of these trade talks, that these have never been about trade talks. Markets have always got it wrong. This has been about a systemic competition between market capitalism, authoritarian capitalism between the United States and China. And it's going to continue. It's going to continue for years to come. And so as you make deals, it really is in a geopolitical context. Then on the deal, Trump wants $50 to $60 billion in agriculture purchases per year after 2 or 3 years. That would be up from $8.6 billion last year, and it would be a doubling from where we were before the trade talks. So that's going to be hard to get to, and the Chinese would have to take from others to give to the U.S., and they're reluctant to do that. The Chinese want an agreement that we're going to back off from tariffs that are currently in place, $360 billion, before they agree to anything at all. So there is a chance of phase one, and there may be some news before Sunday so that the U.S. foregoes a new 156 tariffs on a new 156 billion. But I think this is all really a dance. And the Chinese see that right now, although they're suffering economically, they have their slowest growth in 30 years, politically and diplomatically across the world, they're actually gaining right now, and they're winning strategic space on the United States.
You know, Fred, it's harder for the market to look at how things are going to play out over 10 years, even longer. What you're talking about is a battle and these two superpowers that are kind of coming head to head and trying to figure out how their relationship is going to take place over time. But I'm trying to figure out what happens between now and December 15th, just in terms of what happens with these tariffs, because that's kind of the one thing that could really I think pop the bubble in terms of where the market is. Not that I want to suggest that these valuations are getting bubbly, but we are sitting at new highs. The economy's going in favor of the market continuing to climb. The one thing that would go against that is if we hit a real roadblock, and it sounds like things get a little frostier between these two nations between now and the end of the year. What's your guess on that front? Do both of these nations have enough riding on this that they want to see something wrapped up, or at least it's a détente situation?
Well, I think you hit the word with détente. I think they have enough riding on it that they don't want to have the new tariffs come into place on Sunday. And I don't think Trump wants that. I don't think President Xi in China wants that. So the best outcome from the negotiator's standpoint would be some sort of phase one deal that could be agreed in principle before the weekend so that you don't go into these new tariffs. Short of that, you could have enough progress so the U.S. just punts. And it looks like U.S. negotiators are willing to do that and push beyond. That would be the best outcome. The new complication, we also have today the 6-month anniversary of the Hong Kong protests.
Yeah, and the big protests we saw over the weekend with massive turnouts from crowds there.
800,000 people. It was actually allowed by the police. And so you have also new sanctions. The House has passed sanctions supporting the Hong Kong protesters. But more importantly, from the Chinese side, it has been on the Uyghurs and on the province that is repressing the Muslim minority, and sanctions on anything that could help government surveillance. That's that is even larger than their defense budget. And so that could really affect what technology companies from the U.S. can send to China. And it also cuts to the bone more. The Chinese are quite upset about this. So it's going to be really interesting to see how the trade talks play out against these new human rights tensions. Interestingly, the Chinese are blaming U.S. NGOs and they're blaming Congress. But so far, they're really not blaming Trump. So they're looking like they want to leave the path open for a deal with Trump.
So even though it looks like things are getting more precarious, your headline here would be, don't read too much into it just yet.
What the Chinese are telling visiting business people, non-American business people, is they want no escalation. They're going to play this as reasonably as they can. The rhetoric's become tougher, but they're still not walking away from this table. They're still seeking a deal. They need it because of what's happening to their economy. But on the other hand, there's a lot of pride invested in this. And so I think the Chinese are going to keep this in balance. I think the U.S. is going to keep it in balance. I don't think we'll hit crisis, but don't bet on if it's a phase one trade deal, it'll be weak. And don't bet on a phase two trade deal anytime in this administration.